CAP Rajarajan sir, respected speaker, CA JOMON sir, past chairman of SARC sir, respected ex officio member, immediate past chairman of SARC, DC Jain sir, respected secretary madam, respected SICA chairman and treasurer, respected past chairmen, management committee members, senior members, fellow members, and junior members. Good evening to all. We welcome the speaker and all the participants to this meeting. We thank the respected speaker for immediately accepting our invitation, even in hectic corona period in Kerala, and for being here with us to speak about audit of private limited companies with the thrust of AS and ACS. Thank you, sir. Now I request the chief guest, P.V. Rajarajan sir, to address before the audience.
Beloved chairman of the Madurai branch of the Southern India Regional Council of the Institute of Chartered Accountants of India, Mr. Moganasundaram sir, the secretary of Madurai branch, Manimegalai madam, and past chairman of SARC, my good friend, vibrant Dungarchan Jain, and my good friend, Mr. JOMON Judge, today's speaker. I am really proud to be the chief guest for Mr. JOMON Judge session. He is an authority on the Companies Act, past chairman of Ernakulam branch, past chairman of SIRC of ICI, Mr. JOMON Judge, and the committee members, Mr. Venkatesh and all the respected senior members and my professional colleagues. Pleasant good evening to every one of you present here. First of all, I seek your apologies for causing delay in meeting the meeting because of the technological issues where I am the part of it. First of all, I thank the Madurai branch for giving the opportunity to be the chief guest of this virtual meeting, where my good friend, past chairman of SIRC, Mr. JOMON George, addresses. I welcome Mr. JOMON George to Madurai branch virtually. I really remember and recollect many of the good events that we had during our council term. JOMON George is a very nice person, and he is I can say, authority on the Companies Act. His presentation today will be of much use to all the Madurai members. I want to tell a few things about the Companies Act. I will not encroach in the presentation part of Mr. JOMON George. Dear members, as all of you know, this Companies Act has also become one of the dynamic laws in today's scenario. Previously, we used to hear or face the lot of amendments in the hello.
Audible, sir. Please go ahead.
Yeah.
Audible, sir.
Income Tax Act. After the GST has been introduced, we have been facing every day there is an amendment. Now, the Companies Act has also been put into the basket of amendment acts. There was 56 Act and 2013 Act. After 2013, so many amendments have come in 2017, 2019, 20, 21 and all. If you take any one of the chapters, there will be one amendment. So that is the uniqueness of the Companies Act. For example, for the year either financially at 1920 or 2021, so many changes have been enacted. In the financial presentation statements in Schedule 3, there have been changes. And in CARO reporting, there have been changes. And in CSR activities, there have been changes. And a lot of act has been, provisions have been amended. For example, Companies Accounting Standards Rule 2021, though it is going to be effective after 1st April 2021, this has been amended on 23rd June. So like that, if you take any of the chapters of the Companies Act, there are amendments. So with this, we have amendments after COVID in the accounting standards also, though mainly those provisions are related to COVID issues. But what is the importance of this? One has to understand the major amendments in the Companies Act. Why it is important? Because unless otherwise we are well equipped in the Companies Act provisions, if you sign the balance sheet, the chartered accountant may also be put into difficulties. And the management will also blame the chartered accountants only because of the lack of knowledge of the chartered accountant. The company is put into trouble, though we are not getting that the remuneration which is to the cope up with our knowledge level. So it's very, very important to update the various provisions of the Companies Act. So in keeping this in mind, Madurai branch has organized a very good meeting and very good topic on the Companies Act. And Madurai branch is also has invited an apt person, Mr. JOMON Judge, who has presented a number of times the papers on this Companies Act in many of the branches of SIRC and other places also. And through his biodata, you will be understanding the knowledge level of JOMON Judge. Dear friends, nowadays the standards on auditing is also very, very important. There are so many standards, mainly reporting standards are very much important. And one grievance which I am having about this Companies Act is that I have been telling to many of my council members and many of the past presidents also that this Companies Act should be divided into three. One for the private limited companies which are not having any borrowings, or husband and wife companies, or family related members companies. Another one is a private limited company or a public limited company which has borrowed huge money, say let us say 5 crores of rupees, 10 crores of rupees, like that. Another one is there should be an act for the listed companies. But unfortunately in our country, we are having the same provisions for a private limited companies with the husband and wife, the listed companies which are having turnover of about 5,000, 6,000 crores, and public limited companies. But generally certain privileges are given to the private limited companies. But coming to the penalty and all, there is no such privilege. So I request all the members to make use of the opportunity of Mr. JOMON Judge and the speakers and the deliberations after the speech of Mr. JOMON Judge. I thank once again the Madurai branch for giving the opportunity, and I am also eager to hear Mr. JOMON Judge. Thank you very much.
Mohansundaram sir, unmute pannum sir. Mohansundaram sir.
Thank you, sir. Thank you for your encouraging address, sir.
Thank you.
Now I request ex-officio member, immediate past SARC chairman, DC Jain sir, to give special address.
Yeah, beloved chief guest for today's program, CAP Rajarajeshwaran, our own member and past SARC chairman also. And happy to see JOMON today addressing on a very, very important topic, because the moment the word audit and Companies Act come, I think the next name that will come to us is JOMON K. George for the authority what he has on the subject. And it is just not that because he's got authority, he's vocal about a lot of things actually. So that's one thing we have kind of chosen a right speaker for the topic of audit of private limited companies with thrust on accounting standards and standards on auditing. Probably he will cover a lot of things. Only two things I wanted to touch upon is professional skepticism and documentation. Many a time we just give a small leniency telling that, okay, the person is highly trustable, we don't have to worry about it and give it a go. And second, on documentation. I remember we do a lot of good work, but when it comes to documentation, we are not able to have it. So if I think if these two things are properly taken care during the closure of audit, at least, I'm very sure whatever work we have done, we'll speak about it. I still recall in one of the investigations, I will say, they found an innocuous entry of 9 crores. It was actually in Vijay Mallya's case. They said payment made to air climber support. So the first thing was, okay, there must be some aircraft spare part which they would have got, which would have cost this huge money. But later upon investigation, they found out that it actually was a race horse. The name was air climber support, which was bought and booked in the accounts actually. So as members, it is our duty to see that we take care of those things. Just go one step further to see that the important thing is not missed out. And I always tell that deep laid frauds, we will never be able to find out, but it is our duty to see that the basic checks what we need to do should be done actually. So eagerly awaiting to listen from JOMON. Only thing is I will not be available full time. There is another meeting at 6. So I will sneak out and if possible, I'll try to join again. Thank you.
No problem, DC. I understand your schedule. Thank you so much for the nice words. Yeah.
Thank you, sir, for your brief as well as wonderful address, sir. Now I request Secretary Madam to introduce the speaker, please.
Happy members, it's my pleasure to introduce our respected speaker of the day, CA JOMON K. George, past chairman of Southern India Regional Council of ICAI for the year 2019-20. CA JOMON sir is a fellow member of the Institute of Chartered Accountants of India with 28 years of diversified practice experience. He is a mentor for Philip Macmillan Woods, a multidisciplinary accounting and consulting firm based in Dubai. He is a faculty for auditing at the Institute of Chartered Accountants of India. He is a passionate teacher. He is a regular resource person on professional circuit on accounting and auditing standards and corporate audit. He has done more than 900 presentations. CA JOMON sir is also a peer review trainer. He was a member of the Auditing and Assurance Standards Board of ICAI. He was chairman of ICAI Ernakulam in 2002-3. He has traveled extensively in the UK, Middle East, and the Far East. Also, CA JOMON sir is a past president of Rotary Central and member of various social clubs and honorary secretary of Kerala Management Association. He has authored a book, Trails, Pin Padagal. Am I right, sir? Reflections of Personal and Professional Life, released in February 2021. He is a member of Advisory Board, St. Teresa's College, Ernakulam. With this simple words, I know you have sent me a very small profile in spite of your big achievements. With the simple words, I hand over the session to you, JOMON sir.
Thank you, ma'am. Thank you. Good evening to all of you. The dynamic chairman of the very, very vibrant Madurai branch, Mohan Sundaram sir, Secretary Manimegale madam, who has given a very nice introduction of me and who has been constantly following up with me, making sure that everything is in place. Just 10 minutes back before we started, she sent me the link once again to make sure that I'm able to log in without any difficulty. Very, very respected PV Rajarajan sir, under whom I got trained in the council, and I was SICASA chairman during his chairmanship. We traveled across the region with him, and from him I learned a lot of very, very valuable lessons in life. Being simple, being humble, being focused, being assertive when it is required, and being extremely friendly. And we had a great year under him and in 14-15, and the SIRC was, and we still remember the Madurai conference. Before sir, you logged in, we were just sharing some of the experience. We were reminiscing the Madurai conference. A wonderful time, the ilanir, the snacks, the everything, people still during my conference, it was in a hotel. So that kind of that personal feel, sometimes we felt that it was really, really missing. So sir has been a guiding force me. I keep in touch with him very regularly. Thank you for joining this evening, sparing a valuable time as a chief guest for this evening.
Thank you.
And my very dear brother, I would say, DC Jain, Dungar Chand Jain is very, I will call him DC. And so many times, how much we have traveled together as chairman and vice chairman. And we always used to share the room. I have the problem of snoring a little bit, and DC used to tolerate that. And he said, comparatively, relatively, I'm better as compared to some of our council colleagues. So we had a great time. And as chairman last year, with all the difficulties posed by, he was the chairman immediately as he took charge. You would be really let down when the whole planning goes haywire and completely changed because of the COVID. And he took charge on 20th February, if I remember correctly, DC, 20th February 2020. And it was just in less than 1 month, as we was gearing up for a wonderful year to travel across. COVID came in, but he lived up to the saying that when the going gets tough, the tough gets going. And he brought us a conference which is like the old Philips advertisement. It was almost like being there, but missing out on the real snacks and the Madurai food. Other than that, everything was like almost being in Madurai, involving all the seniors, very participative. DC is that way, an inclusive person, and I have really enjoyed his company. And for me, he's a brother. And thank you, DC, for joining this evening. I know you have some preoccupation, so you are at liberty to leave. Absolutely no problem. Other managing committee members of the Madurai branch, as we call it, MBSIRC, MBSIRC, proudly. So MBSIRC, very respected senior members. I'm seeing some of the past chairman of the branch, Jaishilan sir, and many others. And respected senior members and my dear colleagues, we are about 42 of us as of now, and maybe others would join in a little later. But on a Saturday evening like this, it's a good number. So that's about that. So at the outset, let me express my sincere gratitude for giving me this opportunity of interacting with the Madurai members. We are at the threshold of the audit season. Some of the listed companies, audit has been completed. Some of the technologically advanced companies, where we could do online or remote access audits and all that. Otherwise, most of the private limited company audits are waiting to be done. And today we have a big problem with the income tax portal. So when Rajarashan sir was talking about apologies for being late, there is no need for an apology because Nirmala Sitharaman is apologizing, Infosys is apologizing. So being apologized, there's no need for that because technical snacks happen most of the time. So I may also, there could be a problem with the signal a little later. So, but then with that, all the income tax deadlines will get extended. But today, as Lisa rightly said, today we are in a very peculiar environment in the sense that we are doing audit like in times like never before. And we are praying that times like never again. Second wave got over, and third wave, hopefully, it should not happen, but it will be mild. But I hope all of you are vaccinated. I've taken both the vaccines, first dose and second dose, and keep the basic distancing and things like that. We have to be careful. It is better to be careful than not. So I'm wishing you safe times in these difficult times. But then while we are careful, we should also be hopeful that this too shall pass. The world has seen the Spanish flu and all that, and we have come out of that. Normalcy should resume and would resume. We should be careful at the same time, exercising the due care. And when it comes to the topic, Rajarashan sir has already mentioned about how dynamic the company's law is today. Quite like the Income Tax Act. Income Tax Act, the Finance Act, every year makes a lot of changes. Companies Act used to be kind of static. It was not changing. But now there are rapid changes in the Companies Act also. Sir mentioned about accounts audit. Every sphere of the Companies Act, there are changes. And same as DC said, professional skepticism. Being a little skeptical, I'll come to that topically. In one of the slides, DC, thank you for highlighting that particular point. Last year, from May 2020 to, March 2020 to June 2020, AISB and AISB, we were fortunate to have Shekhar sir as AISB chairman and MPV as the AISB chairman, both from South. They worked overtime, really burned the midnight oil and brought out 6 COVID-related pronouncements. The common thread in that in all the 6 pronouncements was about the professional skepticism, being a little doubting, taking explanation for granted. I think I heard from DC that skepticism is nothing but saying, sir, we trust you, but still we would like to verify. Correct, DC? I think I heard you, I am quoting you only. So we'd like to verify and being a little doubtful. There's a biblical term, I'm not talking religion here, doubting Thomas. He will only touch and feel, and only then he would trust that the resurrection has happened and all those things. So that's a key thing. So this is a backdrop in which we are discussing this very important topic. All of us there here in Cochin or in Madurai, all of us have some private limited company audits. So we are in a dynamic environment, and added to that, a lot of changes happening in the sphere of accounting standards and standards and auditing. This is the topic today. So with that introduction, once again thanking the organizers for the opportunity. Let me try to share my screen on this presentation. Is it visible, DC? Yeah.
Yes, JOMON, yes.
So I'm seeking the blessings of Madurai Meenakshi Temple. I've been there, not really inside, been there, and then seek your prayers in all that we should do. And audit of private limited companies with trust on AS and SS. Moving on, the key aspects, when we talk about the key aspects of an audit, I would touch upon some of the basics. In fact, I had requested Chairman Sir to invite the final students also. They've gone for exam leave. This May exam got extended and they are taking exams. Final year students also, they could probably join. I mean, because this is something, they are our field marshals. They are the people who do go and do the audit. So one is touching upon some basics, ensuring that this true and fair is very, very important. True and fair, that is what our opinion is all about. The end product of an audit is an opinion. It is conveyed through the auditor's report. Presentation and disclosure, presentation of financial information and required disclosures. So Schedule 3 under the Companies Act 2013, we have Schedule 3. Accounting standard compliance. Accounting standards form the grammar of financial reporting, So therefore, we have to comply with accounting standards compliance, not for the sake of it. It is mandatory under the Companies Act. We will see as we go by. And lastly, informed reporting. That's the main body of the report, true and fair, books of accounts, all those things. Internal financial controls in the case of certain companies, we'll see for whom that's applicable. And then we have the CARO reporting. Here, talking about that, PVR sir mentioned about amendments in Schedule 3 and CARO. But let us preempt that discussion, preempt the new CARO 2020 and the Schedule 3 revised. Both are applicable only from this running financial year. My presentation today is mostly focusing on audit of financial year 2021, year ended March 2021. So therefore, CARO 2020 and Schedule 3 revised are applicable only for the running financial. But some of you may be doing listed company audits. Listed company quarterly audit if it's there, not for limited review. Quarterly audit if it's there, you would be reporting under CARO 2020 and also the new Schedule 3 requirements have to be compliant. I was together on screen with Gururaj Acharya 3 days back for a SARC program. And he was saying that, okay, though the Schedule 3 is applicable, revised or applicable only from this running financial year, financial year 2021 finalized பண்ணும்போது, you should have a dry run. See whether you are able to get these disclosures parallelly. Do not become part of your formal financial reporting, side by side, like a memorandum account as we used to call them. That he said we should start doing this. So that is one suggestion which has come from an expert like Gururaj. So these are the key aspects. Moving on, there's a comment which came from Injetti Srinivas, the former MCS secretary, which is a little shameful for the profession. He made the statement, we do not expect the auditors to find a needle in a haystack, but they must see the elephant in the room. Because in IL&FS and there were many corporate failures where this audit lapses were also a part of one of the reasons, major reasons for that. Therefore, he made the statement. So we have to wake up to this and say, make sure that we should see at least the elephant in the room. This is something which my dear friend Mohan R. Levy from Bangalore, who regularly writes in the business line, said, clinging on to the judgment in Kingston Cotton Mills case, delivered in 1896 as an insurance policy is not advisable anymore for you, me, individual members of the profession, as also the profession as a all. Therefore, this is delivered 1896. Lot of water has flown under the bridge, and therefore today we have regulatory environment is different, statutory environment is different. So we should not cling on to this definition. So this is an extension of that. Amarjit Chopra sir, past president of our institute, whom DC is also very close to, he said auditors cannot be just watchdogs. That was a decision in Kingston Cotton Mills. Auditors is only a watchdog, not a blood dog. At least be barking dogs. If we do not blow the whistle, it might be taken away. The whistle might be taken away. That is a point made by Chopra sir, Amarjit Chopra sir. So we can see that there is a lot of need for the auditor being a little more active, alert, vigilant on things which are happening, and as Lisa rightly said, being a little more skeptical, applying more of professional skepticism. With that, let us move on to some of the things which are relatively new, not that happened just for this year. In the past many years, this has happened. Cash flow statements are today, by definition, under 2 subsection 40, are part of the general purpose financial statements, cash flow statement. P&L, balance sheet, P&L and cash flow statements. Schedule 3, the new format is there, but not for the latest revision is applicable only for the next year. But even before that, there were revisions. Depreciation on tangible assets are today based on useful lives, and there are no arbitrary rates. We have to arrive at the rates applying the number of years. Ind AS has been made applicable for certain companies. Ind AS has been made applicable. Small companies, most of the clients we have, Ind AS is not applicable. I'll have a slide on that. So we will preempt Ind AS also. Auditing standards have been made mandatory. Auditing standards have been made mandatory under section 143(9). 143 is a section which is captioned as powers and duties of auditors and auditing standards. In that, there's a subsection 9 which says that every auditor shall comply with auditing standards. This is a key point. If you are aware, DC will surely tell us that last 2 years, the ICA Council has made it mandatory for branches to organize. 2 topics are mandatory. One is standards and auditing. The other one is the new code of ethics, COE, code of ethics. So we have to be very alert on this standards and auditing. And therefore, that's very important. New reporting requirements, including key audit matters, we'll see as we go by. Fraud reporting, penalties for failure, 143(12). Penalties for failure, there's a guidance note separately on that. So 143(12), this has to be seen. Come to the auditing process. Sir, why am I discussing this is because many of us today get into the shoes of the management and do the preparation of financial statements. You and even I do that. I'm not saying that we can completely stop doing that. But today, when into the code of ethics, the auditor taking up management responsibilities is seen with a lot of disfavor. Within that process, when we prepare financial statements, we tend to think that certain things are audit considerations take a backseat. We do not give the required importance. One is opening balance checking. Are we doing it? We used to put the tick here during our articleship days. Opening balance from previous years, audited schedules and sub-schedules, we put a tick there. And in the ledger, we used to put a tick. Today, the tally data is flying around. We talk about data integrity. The client has no problem. The accountant has no problem in sharing the tally data with our articles. So, but then the opening balance checking is a very important part, properly bringing forward the previous year's balances. Internal control evaluation and communicating with those charged with governance. TCWG is a short form of those charged with governance, interchangeably with the management, but need not be part of the board also. Somebody who like a operations manager is also those charged with governance. That we should do internal control evaluation and communication. Vouching, very important exercise, which we are not doing, some of us are not doing these days. Vouching, examining the source documents, mandatorily it has to be done. Ledger analysis or ledger scrutiny, these are all basic things. Why I am reinventing this is to make sure that we are not confining the preparation of financial statements in an audit. Verification of assets, physical verification of assets, stock, documents, etc. These are all part of the audit process. But some of these, like for example, stock verification. Why is that there is so much of bad loans in the country? Bad loans in the country because the corporate balance sheets which are filed with the ROC or with the bankers have crores and crores of non-existent stock lying there. So are we seeing that the stock which is in the balance sheet physically exists in a saleable condition? They are fairly valued in accordance with the GAAP's generally accepted accounting principles. That is AS2. We have a separate standard on valuation, AS2. So that is there. Now comparing financial statements, books of accounts. How many of us obtain a signed trial balance from the finance manager or the director of finance? At that level, we should insist on. And we should yield too much to the client. So this is very, very important that we do this. Analytical review talks about ratio analysis, trend analysis, all those things we should do. Accounting standard compliance, yes, we are coming to that standard by standard, we'll see in the next 1 hour or so. And then Schedule 3 compliance, information for notes on accounts. And lastly, CARO points for reporting. These are things which we should, part of the audit process. Now, just go through some of the relevant points which are part of Schedule 3. We have been following. What happens is most of the audit firms have this copy-paste business year after year. Last year, whatever we did, we are carrying it forward and we just change the year and all. Here in Schedule 3, this is very important that the current non-current distinction is based on the operation cycle, which is 12 months. This is to say that all sundry debtors are not current assets. All sundry creditors are not current liabilities. If you have an arrangement with the creditor that you will pay him only after 12 months, say 15 months, then becomes a non-current liability. Similarly, if you're giving a credit of more than 12 months to a particular debtor, customer, it becomes a non-current asset. So that is one current non-current distinction, which is new in the Schedule 3. And debit balance of profit and loss account is to be shown as a negative figure under surplus. So we do not have the old bottom heavy balance sheets. The reserves itself as a bracketed item, we'll show it as a negative figure. Period and amount of continuing default on the balance sheet date in repayment of loans and interest to be disclosed. Now this is getting completely amplified. The scope is getting enhanced once the new Schedule 3 or the amended Schedule 3 takes effect from financial year 21-22. Madam, I am audible. Is it okay?
Yes, sir, you're audible, sir. Please go ahead, sir.
Right. Share application money, sir. This is a very tricky thing. We have been throwing share application money pending allotment because there was a feeling that this is out of 269 SS. I'm not a tax person. I moved away from tax practice, income tax practice about 10 years back for the sake of specialization. Something which I'll talk about towards then, but every one of us doing, if we have 5 partners, for example, sole practitioners, no other go, they have to do everything. But if there are 5 partners, why not have one partner as a corporate law partner, one as a tax partner, one as indirect tax partner, one as a tech partner like a DC, a person like DC can be a technology partner. Today, technology is making huge changes. And I hope you are informed that the regulatory framework for multidisciplinary partnerships are through. We can now partner with cost accountants, company secretaries, MBAs, IT, all those people we can partner with. So multidisciplinary partnerships are going to be the order of the day. So now talking about share application money, this have been lying there for very many years. 2013 Act came. They said the share application money has to be refunded. If it is not allotted, refunded within 60 days. From the 60 days, we have another 15 days. 60 plus 15, 75 days share application money has to be refunded, which means that it is a current liability and not as a part of equity capital. So that has to be very clearly noted. Here, this is talking about some indication on materiality. The point here is any item of income or expense which exceeds 1% of the revenue from operations or 1 lakh, whichever is higher, needs to be disclosed separately. Any item of income and expense is from the P&L standpoint. These are the Schedule 3 key points. Now we'll see what we discussed in the slides one by one. Cash flow statement, section 2, subsection 40 defines financial statements to include balance sheet, P&L, cash flow, and SOSE. SOSE is statement of changes in equity. SOSE, that has not been notified. But 2 subsection 40 by definition, cash flow is also part of general purpose financial statement. But some of the companies, PVR sir was talking about this difficulty. Why is that a husband-wife company or father-son company is put to the same kind of regulations, restrictions, like a listed company, like Reliance, and talk about a small private limited company in Madurai or Cochin. But today, sir, there are a lot of relaxations for private limited companies. Originally, when it was enacted, Companies Act 2013 was enacted in a hurry. There are a lot of issues. But today, we are talking about decriminalizing, ease of doing business, and things like that. So with that, we have this private limited company, a lot of exemptions are there. A small company, a startup company, a dormant company and OPCs, one-person companies need not prepare cash flow statements. Cash flow statement, if it is there, then the auditor's report also should have a reference to the cash flow statement. Please take note of that. Here, the problem we are seeing is we also have a reference to the FRRB findings, Financial Reporting Review Board findings, which was headed by our friend Babu Ibrahim sir. 2018, they came out with a said hard copy as well as the soft copy is available. The complaints here is that many of the applicable cases, cash flow statement is not prepared at all. And here also we have income from income from operating activities, investing activities, financing activities. I hope all of you are familiar with the Patabi sir, Patabi Ram sir, Chennai. There are program. So, sir and myself, we were in Muscat in 2009, if I remember correctly, for an IFRS program. So, sir was doing a cash flow statement. His own style, his style is slightly different. He asked this question: you have a balance sheet which gives you the position. You have a P&L which gives you the performance. Why the hell do you need a cash flow statement? We had about 42 participants from various nationalities. We had mixed responses. Then his next slide was very striking. Turnover is vanity. Turnover is vanity. Boss, I have a turnover of 500 crores. That is vanity, showing off. Shakespeare famously said, vanity, thy name is woman. I don't fully agree with that, but then that's a quote. My mother was an English professor. So I used to hear a lot of Shakespearean Shelley quotes from her. So vanity, turnover is vanity. Profit is sanity. Profit is sanity. But cash is the only reality, and hence cash flow statements. Today, all of us chartered accountants are finding it difficult to get our dues collected. Because when the going was good, we did not pressurize the client and we could not collect. So now they are in problems, so we are finding it difficult to collect. The going is a little difficult for the president. We'll discuss that towards the end. Now, depreciation, I'm sure you are familiar with the new system of the Schedule 2, where as again is the old Schedule 14, instead of the arbitrary rates, we have Schedule 2 based on detailed assets and useful lives. I think Venkatesh sir is taking a photo of the screen. I hope so. I'll surely share the slide deck with the branch, madam, and you could probably circulate with the members once the presentation is over. Normally, you do not do it before the presentation. Immediately after the presentation is over, before I sign off, I'll send it to madurai@ica.org. Residual value is arbitrarily taken at 5%. It could be a different rate. The useful lives also could be different, but it should be based on technical evaluation. The chartered accountant is not technically competent or trained enough to have a valuation of an asset. So, like a building or any asset for that matter. Financial assets, of course, we have our valuation methods. So, with that, this could be different based on technical evaluation. And for intangible assets, sir, AS 26 tells us how an intangible asset has to be amortized. There's a rebuttable presumption that the useful life of an intangible asset will not exceed 10 years. So under straight line method or return on value method, we depreciate or amortize them over a period of 10 years. But if it's computer software or design charges, 10 is substituted by 5. It should be written off in a period of 5 years. This is the amortization principle, cardinal principle you find in AS 26. Even for the Companies Act, they are saying not given rates for useful life for intangible assets. Follow AS 26, that's what they say. That brings us to accounting standards. Special thrust on accounting standards is because today we have 29 minus 2 accounting standards. I'm not talking about Ind AS. Ind AS we'll see separately. Ind AS are applicable only for large companies with net worth exceeding 250 crores. 250 crores net worth. If it's a subsidiary of such a large company also it will apply, that we'll see later. But for the majority of our clients, 95% of our clients, my clients, your clients, accounting standards will apply, not Ind AS. Accounting standards, we have 29 minus 2. Why is it not 27? Because 2 of the standards have been withdrawn, but they have not been renumbered. AS 6 on depreciation. PVR sir was talking about the amendment in 2016. AS 6 on depreciation. AS 8 on research and development, both are withdrawn. So we have only 27 standards in vogue now to comply with in financial reporting. And the latest thing which has come is Companies Amendments Rules 2016, Companies Accounting Standard Amendments Rules 2016. In 2021 also one has come, but that will not discuss. Let us not get confused there. So this is the point here. Now, majority of our clients fall under this definition. Companies Accounting Standards Rules 2006. First time, again, like PVR sir said, to relieve smaller companies from the difficulty of complying with technically complicated standards, they categorize companies into small and medium companies and Non-SMCs. They have not used the term large companies. Non-SMCs. That is effectively large company. Its debt securities are not listed or proposed to be listed. Equity or debt securities listed, proposed to be listed in India or abroad. It is not a bank, financial institution, or insurance company. Its turnover does not exceed 50 crores in the previous year. And its borrowing does not exceed 10 crores at any time during the previous year. So when we are talking about 2021, we should look at the turnover of 1920 or borrowings of 1920. Now this limit has been enhanced by 5 times, but then recently, but let's not discuss that, that's futuristic. Now we'll confine to 2021 onwards only. Okay. Now the last one is, it is not a holding or subsidiary of a non-SMC. Our clients, a private limited company could be a small private limited company sitting in Madurai or Shivagashi or Cochin or Calicut. But this is a subsidiary or the holding of a larger company. In that case also, this company will also become a non-SMC. So the cardinal principle is that for a non-SMC, for a large company, all the standards are applicable in total, in entirety, completely. For others, there are some exemptions. We will see as we go by. This is the broad thing where we are saying that all accounting standards except 70, 23, 25, 27 are applicable to SMC. Standard 17 is segment reporting. 23 is accounting for investments in associates. 25 interim financial reporting. 27 joint ventures, financial reporting, interest in joint ventures. So these 4 standards are not applicable to SMCs. Other standards, there are certain partial exemptions. We will see as we go by. So if you are a non-SMC, large company, which we have seen the definition, if you are a large company, all the standards in total, in entirety, it will apply. Otherwise, for small companies, SMCs, these 4 standards are fully exempted. Other standards, a little bit of changes are there. Now let us see some of the changes which have happened in the accounting standards, sphere of accounting standards. One is proposed dividend. Proposed dividend, if for example, 2021 accounts we are finalizing. Let's say next to Monday or Tuesday, we are finalizing the accounts of a private limited company or a public limited company for that matter. And the board wants to recommend a dividend. The key question is whether as on 31st, that is for financial 2021, we are finalizing the accounts, dividend is getting recovered. Are we doing this and then we saying that, okay, so do we have to go back to 31st March 2021 and make an entry? We used to call it appropriation. P&L appropriation we used to call them. Now it is all in the vertical form, dividend. The answer is no. Proposed dividend need not be, should not be provided for, need not be provided for. The key point here is that it is not an adjusting event. It becomes a liability only when it's declared in the AGM. Therefore, that dividend, final dividend of 2021, recommended day after tomorrow or Tuesday by the board will get an accounting hit only in this financial, running financial. Depreciation standard is withdrawn. AIS 6 is withdrawn. Now it is merged with AIS 10. AIS 10 has also been renamed. We'll see. The new name of the standard is property, plant and equipment. Associates, joint ventures need not be consolidated. That we'll see in detail as well. So one standard where the lot of common mistake is that in the case of companies, even if the number of employees are very small, like 10, 15, 20, etc., actuarial valuation is mandatory for providing for terminal benefits or defined contribution plan, defined benefit plans. Defined contribution plans are like PF and all that, which we monthly contribute, is defined contribution plan. Here is defined a benefit plan, gratuity, leave in cash flow. Actuarial valuation is mandatory. That is to be done. If it is not done, then the auditor will have to qualify in this report. We'll see as we go on. Funding is not mandatory. Like for example, becoming a member of LIC group gratuity scheme, etc. We need not become a member. Not funding is not mandatory. But if it's funded, in addition to the accruing liability every year of gratuity and the members get senior, you gain more years of service in the organization. In addition to that, if there is a dent or reduction in the value of plan assets, then that should also be provided for. That's the point I'm trying to dive. So probably we can have a Q&A at the end of this session. If you have questions, please raise through the Q&A or the chat box. I'll be really happy to take your questions and answer. I hope I'll be able to answer all the questions. Okay. That brings us to AS 26, jumping over many of the standards, because this is one area where there's a lot of confusion. Recognition criteria concept. AS 26 is about intangible assets. Intangible asset talks about an outlay on an intangible can be treated as an asset or be shown in the balance sheet. Otherwise, what is it? What is not an asset is an expense. It will go drain down the P&L account. If you have to become part of the balance sheet as an asset, then what happens is you should have meet the recognition criteria. Three things are there. One is out of the work or the outlay, a commercially viable product or a concept should evolve. Okay. It need not be a tangible product. It should be some kind of, today we live in a world where a lot of startups have come up with concepts. One app which can really revolutionize. Last 2 days back, we had interaction with the research head of TCS. He hails from a place near where I'm sitting now, and very close to Shabrimala. Many of you have come to Shabrimala. Where a place I'm sitting here is only 40 kilometers from Shabrimala, Swami Ayyappan's board. And this place, Kajirapalli, is hails from that. Robin Tommy is his name. So he's talking about the research which is going into the AI, artificial intelligence, the work that they do, even for disabled children, challenged children who cannot speak. Their thoughts are getting, kind of using algorithms. Their thoughts are getting translated into understandable voice for their parents or autistic child who wants to have a glass of water. So sometimes he's trained to do that. So this is getting done. So technology brings about all kinds of that kind of possibility. So it could be a viable concept. Then there's an intention to commercialize. There's a wherewithal to commercialize in the sense that the resources are there, either on resources or it's planning to borrow and commercialize that. And the fourth point is that that future economic benefits should be flowing into the organization from out of this. If these conditions are satisfied, only then AS 26 says that your outlay is an intangible asset. With that, deferred revenue expenditure not allowed anymore. Preliminary expenses. We will talk about 35D under the Income Tax Act, but here an accounting treatment, the preliminary expenses are to be fully written off in the year of incorporation. 35D may be a different treatment, that's for your tax computation. Miscellaneous expenditure to the extent written off, not written off or adjusted. All that is gone and dead. So this is the impact of AS 26. So that was a quick run on the accounting standards. Now we will see the Ind AS applicability. Ind AS applicability is on all listed companies. To whom are they applicable? All listed companies, unlisted companies with a net worth of 250 crore or more, holding subsidiary, joint venture, associate or the above. All NBFCs. All NBFCs again with this 250 crore criteria is there. 250 crore criteria, if it is there, then it is applicable. Smaller NBFCs is not applicable. But surprisingly for banks, it is not yet applicable. Experts say that it is an orchestrated delay because if you get into Ind AS, a lot of valuation issues will come. Bank balance sheets are already strained, stressed, and therefore they cannot do that. Okay, so these are the companies to which Ind AS are applicable. Listed companies, small and big, irrespective of size. Unlisted companies with the net worth of 250 crore or more. Holding subsidiary, joint venture, associate of the above, and all NBFCs. Again, NBFCs is 250 crore or more. So majority of our clients do not get into this level, smaller clients. So for them, what we do is we comply with accounting standards, not Ind AS. Okay. That brings us to auditing standards. Auditing standards, the Auditing Practices Committee, which was renamed in 2002 as Auditing and Assurance Standards Board. And I was fortunate to be a member of that board in 2005-06. When Manohan sir became the vice president, he co-opted me to the Auditing and Assurance Standards Board. It was a great experience for me. 12 meetings. Every month we used to have meetings. 11 meetings in Delhi and 1 in Mumbai. Last meeting, we also had an interaction with the then president of IFAC, Graham Watt. And there we had a very, very useful interaction with him. So the work that is going into formulation of auditing standards is phenomenal. But then the membership by and large, particularly from smaller towns, are not catching up with the spirit of standards audit. But today one has to be extremely careful, extremely aware, extremely making sure that the audit process is done in compliance with standards audit. Because it's mandatory under the Companies Act 143(9). It is no more just a dictum of the institute on its membership. It is on the entire thing. So therefore, it's very important that we comply with. And in NFRA, again, a new regulatory authority is there, National Financial Reporting Authority, set up under 132 of the Companies Act. So NFRA has started flexing its muscle. If you have been following the case in a 92-page report, came out on IL and FS debacle, and the partners of a multinational firm, Big Four, 2 serving partners and 1 ex-partner, was penalized today by 25 lakhs and barred from practice for 5 to 7 years. The matter is before the Gujarat High Court, I think. I don't think the verdict has come. But then we are in a regulatory environment where there's substantially more of surveillance than we used to have in the earlier period. So this is something which we should be very, very careful about. So auditing standards, we have to be making sure that we comply with. Now, touching upon some of the important standards, we'll go slow here. DC did mention about professional skepticism. SA 200, they are now not called auditing standards, now they're called standards audit. I would strongly suggest that for members and students, we have excellent speakers like Aniket Talati or Madam Bhavani Balasubramaniam from Chennai. They're all experts on standards and auditing. I think you should plan a session on a separate session on standards and auditing, which is very, very important. So SA 200 talks about this professional skepticism. The auditor, watchdog, blood out and all that. The auditor, we are trained that the auditor should not approach every situation with a doubt or a suspicion. But today, see the kind of fraudsters who are everywhere there, the difficult situation businesses are going through in this COVID environment. One has to be substantially more skeptical. So that is a point of professional skepticism highlighted in SA 200. LOE, can anyone tell me what LOE is? It is letter of engagement. SA 210. Standards Auditing 210 talks about the auditor should obtain, before embarking on the audit, before starting the auditor should get a letter of engagement duly signed by the management. Many of us are not doing that. Even appointment letter, board resolution, gel body resolution, we are not insisting on. Do insist. Why I'm telling you, one recent experience I had was a friend of mine. He should be senior to me, he should be over 60 years. In a small town in central Kerala, he was the auditor of 2 private limited companies, which is part of a larger group. And there was one NBFC which went into a lot of trouble. So the whole thing is under investigation of SFIO, Serious Frauds Investigation Office. And then he got a letter from the SFIO. He was the auditor of 2 of the small private limited companies. In one, there are hardly any transactions, but luckily he had all the documents. The first line of the letter SFIO, dear Mr. Swanso, dear CS Swanso, please submit the following. Point number 1, proof that you have done the audit of these 2 companies for 3 financial years, strictly in accordance with auditing standards issued by the ICAI. So how can we in Madurai or Cochin say that this is applicable only for large organizations? This is applicable only, and disciplinary proceedings, sir. I was chairman, DC was also there. He couldn't sit as much as I sat there on the chairman's table. I refurbished the chairman's room, but then DC could not sit there in the new room because of the COVID. It was mostly in Madurai. So there, while sitting there, the DC proceedings used to happen there. Disciplinary committee proceedings. Large number of members, seniors, juniors, middle-aged chartered accountants were pulled up for this disciplinary action. Hearings, they have to come in a formal dress and all that. Present your case. Residential Apartments Association, trust, small cases for a fees of 10,000. I'm really shocked to see that the auditors are taking huge risk. Tevillame associating our name in wherever we could really avoid our association. Many of the members are going and just signing the balance sheet. Fees is not getting like, leave that. There could be disputes. Appointment letter is not there. Who appointed you? A question comes. The treasurer, there's a dispute between the treasurer and the president or the secretary. A lot of issues. In a trust, most of the trust we see that there is no trust at all. So we have this issue. So therefore, get a proper letter of engagement signed by at the appropriate level of management. Then SA 230 talks about documentation. DC did mention we should not only work, there should be evidence that the work has been done. Documentation talks about, earlier it used to talk about a permanent file and a current file and all that. Today that is done away with, but we still have the good practice. We call it main file and working notes file in our office. This is not from the standard, this is my personal system which I'm talking about, or the office system which I'm talking about. It makes sense because many of the places I see that lot of time in the CS office is lost searching for a file. Once you get that file, searching for the right paper, that also is a kind of difficult. So one has to be doing the documentation properly. Not only for that, that's for convenience. The other part is to the regulator. Tomorrow if there is an investigation or as a fire or as a DC, we should be able to make sure that the documentation has been done properly. SA 300 talks about audit planning. Sir, please touch your heart and tell me. You don't have to tell me, touch your heart and ask yourself, how many of us are using an audit program? A medium-sized public limited company or private limited company, let's say 10 crores of capital, 5 crores of capital, 15, 20 crores of turnover, etc., etc. Yes, we think that, yes. We think that everything is on a mental plan, but have an audit program. This is mandatory. This is not JOMON's version. This is what the standard SA 300 tells us. An audit program has to be there. Risk assessments. Today, the environment is so risky. Risk assessment has to be done. SA 315. Understanding the entity and its environment in order to assess audit risk. Yes, very, very valid standard, very important standard. So that has to be. Knowledge of business is very important. Knowledge of business, understand the entity properly. That's very, very important. SA 315. I'm not mentioning the standard numbers here, but I'm explaining that. Audit evidence. Sir, audit, final, the product of an audit is an opinion. For forming that opinion, like about opinion about a person, about financial statements, we need evidence. Evidence, they say, sufficient, appropriate evidence. Sufficient, appropriate evidence. Sufficient talks about the quantity, the quantum of evidence. Appropriate talks about the relevance, quality of evidence, and therefore audit evidence has to be applied. Sir, as a 570, very important standard today, the COVID environment. Going concern, conventionally it is an accounting assumption. AS1 talks about the accounting assumption. AS1. But today, in the given environment, it is no more a safe assumption. It is to be taken, the concept of SA 570, taken with a pinch of salt. Many organizations would have hit the wall. They're not able to hit a dead end. They're not able to move forward. Business have to be wound up, solved in lock, stock, and barrel. Therefore, going concern is a very important concern. It's a 570. Again, standard auditing tells us how to deal with that situation. Letter of representation, SA 580. Sir, this is very, very important. Sir and madams, sirs and madams, this is very, very important. Letter of representation. We should, SA 580 takes that. Whatever management, it's called management representation letter. Whatever the management says, then we should clearly say that, okay, this is, we would like to get this in writing. There is an appendix, SA 580 has an appendix which gives a format of the letter of representation. Mandatory, must be, should apply. And lastly, informed reporting. There are 4 reporting standards. SA 700, 701, 705, and 706. And 700 standard has been revised. Now, title, addressee, look at that. The opinion comes first. It's about talking about a particular XYZ. XYZ is a good boy, or so-and-so is a good boy or a bad boy. Opinion comes first. Followed by that is basis for opinion. Basis for a qualified opinion, basis for adverse opinion, basis for disclaimer, all those things. Going on. Key audit matters. Key audit matters is a new standard which is for the time being applicable only for listed companies. SS 701. Management responsibility, it is part of the auditor's report. Auditor's responsibility, yes, what is that the auditor is about to do? What to say that we have carried out the audit in compliance with the auditing standards, etc., with a view to expressing an opinion on financial information, etc., the matters, balance sheet, P&L schedules, etc., and so on. Other reporting responsibilities, which is our CARO and all those things. Auditor's responsibility and CARO, then signature, date and place. I have left out something purposely. Can anyone of you unmute and respond? What is missing there in the auditor's report? Signature, date, place, everything is there. So can if there are younger members, can you unmute and respond? In that time, by the time you get ready, let me have a glass of water.
Is it a membership number and the UDIN?
Yeah, yes, sir. Membership number and the UDIN. Very good. Nice. Thank you for that. See, UDIN today is a very good insulation for all of us. It insulates us from dubious flies in the sense that the tax practitioners and all of them who are misusing the auditor's signature, they have the seal and all that in their offices. So today, any chart account signature on financial statements or a report issued without the UDIN is not valid. So the IBA, the Reserve Bank, everyone is getting sensitized that way. And so therefore, one should not leave out UDIN. Of course, we have been backdating financial statements. 3 years back before UDIN came, Madam is smiling. All the balance sheets used to be signed on 2nd or 3rd of September, isn't it? 1st September, 2nd September, 3rd September, because AGM last date is 30th September, 6 months from closing of March. Now, today, if you are not able to do it, they have been relaxing. 15 days time has been relaxed, 3 months. And now, I don't think any more relaxation will be there. So you cannot generate 15 days is the time, maximum time you can go backdate a particular signature. Therefore, it is very important. Membership number also, it's mandatory under SS 700. Membership number has to be given in the auditor's report. So you didn't let us follow. I get a lot of DC also would have received a lot of calls saying that there was an omission to generate UDIN. Most of the case, it's not the omission. It is about probably wanting to help a client out of the way, going to backdate. Not advisable anymore. So that is about SA 700. Moving on. Yeah. So having talked about SA 700, key audit matters also. Let me 1 minute. So key audit matters SS 701, applicable only for listed companies. But I would like every one of you, particularly younger members there, to get annual reports of listed companies. Annual report of listed companies. In the auditor's report today, we have a tabular form. What is the key audit matter? What is the matter which came up as a key audit matter for discussion with the management? How the management has addressed the issue, and therefore, it is not a emphasis of matter paragraph. It is not a qualification. Key audit matter. See, this issue was taken up during the course of the audit for discussion with the management. Key audit matter. Management gave kind of satisfactory explanations, and based on that, we decided not to qualify. Okay, this is a management based on, but then it is highlighted in the auditor's report in a tabular form for the reader to understand that, of course, there has been an intellectual interaction on certain points which are of relevance in the finalization of the audit. That's the spirit of SS 701. 705 tells us about the qualifying a report. There are 4 types of reports. JOMON is a good boy. JOMON is a good boy. That is a clean report. The one says that okay, JOMON is okay guy. He's let's say he's a smoker. I'm not a smoker. I stopped smoking long back. So that is a qualified. The other one is the third one is the adverse. No. JOMON is not a good boy. JOMON is a bad boy. Okay. Third one. The fourth one is disclaimer. Sir, JOMON case, I will not opine. You ask somebody else. I'll wash my hands. That's called a disclaimer. So 4 types of reports. That is what is given in SS 705. 706 tells us emphasis of matter paragraph. Emphasis of matter paragraph is like we are not giving a qualification. Emphasis of matter is slightly less than a qualification, where the intensity or gravity of the issue is not high, but still it requires attention. Therefore, we call it EOM paragraph. EOM, emphasis of matter paragraph. That is in SA 706. So 4 reporting standards you should keep in mind. Okay. Now, moving on, we have this CARO 2016. Again, I reiterate, CARO 2020 is applicable only from this running financial year. So March 2021 financial year, what is we are finalizing? It is only the CARO 2016. So the first point, one of the important points in the fixed assets is that whether the title deeds of immovable properties are in the name of the company. I used to wonder, is that not clear? It goes without saying, right? That title of immovable property shown in the balance sheet belongs to the company. It is registered in the name of the company. A mutation has been done, conveyancing has been done, and taxes paid in the name of the company. Possession certificate is in the name of the company. But let me share this experience where we were appointed by the official liquidator a few years back for something like an investigation of a company which had accepted a lot of money from the public, like Ponzi scheme kind of thing. And we investigated, and 18 of the high value properties were finding a place in the balance sheet, audited by a senior chartered accountant in Cochin. The property title were in the name of the promoter, the managing director, or his wife. Not even the name of the company was mentioned in the deed. So therefore, every balance sheet, any balance sheet, the intangible assets which are there, the mobile assets which are there, it has to be in the name of the company, something which we are passive about. We have to call for the title deed. If the original is with the banker as given as a collateral or someone, we should get a confirmation from the bank. Okay. He also talks about physical verification of fixed assets and inventory. Sir, there's a standard SA 501 which says that the auditor should be present. High value inventory, if it's there, it should be present for physical verification. How many of us are doing that? We are not doing at all. Some of the case we're not doing. We're just getting an Excel sheet mailed across. We don't go to the client's premises. But then this is mandatory today. Tomorrow, if there's non-existent stock, a banker is having a problem with this investigation. Where did you see the stock? When did you do the verification? Where are the reports? Where is proof that you had sent your team there? All this can happen. Loans, of course, default and utilization for the purposes. It's a key point. Term loans, which has been taken by the company, have been utilized for the purposes for which they have been taken. Very important, and there's a default that is very high. And related party transactions. Related party transaction, as we see, is seen with so much of disfavor across the globe. In India, Companies Act 188, Section 188, related party transaction. Prohibitions, restrictions. Section 189 requires a register of contracts with the related party related parties. Income Tax Act 48 2B. Accounting Standard 18, related party disclosures. SA 550, standard on auditing. How related party transactions have to be identified in discussion with the management and your approach to that. And compliance and disclosures, this is very, very important. Related party transactions. These are all from a CARO point of view, I'm trying to say. Moving on, we have the new reporting requirements. Some of us have been copy pasting from the previous year. So though we are in the main body of the report saying that proper books of accounts as required by law have been kept by the company, under 143, there is another requirement. Any qualification, reservation, or adverse remark relating to the maintenance of accounts and other matters connected there. Observations of the auditors on financial transactions, matters having adverse effect on the functioning of the company. And internal financial control reporting. Sir, they had Institute said it is cannot be internal financial controls. Internal controls or financial reporting, ICOFA. And companies having small companies, Madam, am I audible?
Yes, sir, you're back.
Yeah, okay. There was some problem with the network. I'm through, I think. Yeah, okay, fine. I need to share my screen. Let me see. Is it visible now? Is it visible now?
Yeah, yes.
Okay, thank you. And so 25,000 fully compliant, we are exempted from IFC reporting. So we have 3-4 pages extra in the auditor's report. That is done away with small companies. If your turnover is less than 50 crores, borrowing is less than 25 crores, and if you're fully compliant, yes. Auditor to make a statement in his report as to whether the remuneration paid by the company, managerial remuneration, is in accordance with 197. That is also a relatively new requirement, but they're planted in 197, not under 143. One has to be careful about that. Not applicable for private limited companies, there's no restriction. The case of public limited company. New reporting requirements, we are continuing with that. Impact of pending litigations on financial position. Huge impacting litigations could be there against the company. In fact, the SA 501, special consideration for selected items, one of the items is litigation against the company. So if there is something which is already materialized, admitted liability, it should be provided for. If it is not, then it has to be disclosed as a contingent liability. Therefore, one has to be extremely careful, clear in doing that. Okay. Provisions as required by accounting standard for material foreseeable losses on long-term contracts, including derivative contracts, have been made. Provisions have been made. This sounds technically complicated. Derivatives, people deal a lot of, F&O segment of the market, which is today bigger than the cash market. Many people are addicted to trading in indices, trading in futures and options. All those things are there. Derivatives are there. But world's most successful investment banker, Warren Buffett, made a statement. I do not deal in derivatives because I do not understand them. They are weapons of mass financial destruction. Weapons of mass financial destruction. WMD, there was a term during the Iraq war aggression. The US said Iraq is sitting over weapons of mass destruction. So Warren Buffett said weapons of mass financial destruction. And therefore, I do not deal in derivatives. Whether he does that or not, it's a growing market. A lot of people are very actively in futures and options. But here, derivative contracts, if there are foreseeable losses, it should be provided for. Forget all that. Take a construction contract, as in AS7, Accounting Standard 7. Take a construction contract where the outcome, a 3-year contract. We have a contract which takes about 3 years to complete. At the end of year 1, you find you're clear that the ultimate outcome of the contract is going to be a loss at the end of 3 years. That loss, the expected loss at the end of 3 years should be immediately provided for the first years. That is what this particular point is highlighting on. Delay in infinite transferring to Investor Education Protection Fund. That brings us to the last part of the presentation. What's time like? Okay, it's only 6:30. I think another 10 minutes or so, we will be able to round up and then I'll take a few questions. COVID pronouncements. And why court pronouncements at all? Like we mentioned earlier, the whole situation changed with the lockdown in March 2020. And we were finding it difficult. Businesses were not able to function. They were all kind of complete grinding halt it came to. So March 20 as well as March 21, again, running financial year, the lockdown continued. So we had a peculiar situation. The institute came out with this kind of pronouncements. I was hailing Shekhar sir and PV. Accounting and Auditing Advisory, Impact of Corona. It came out on 27th March. I think if it was a physical meeting, I would have asked all of you to give a big round of applause. Am I audible?
Yes, sir. Yes, sir.
Okay. Yeah, okay. So here within, when there's a lockdown, maybe early March, within such short span of time, a very detailed advisory came in, which is good reference. All of us should read that. Going concern, key considerations amid COVID-19. Subsequent events, what has happened after March 20 and today after March 21, what is the position? Because we had a lockdown in part of April, May and all that. So key audit considerations, subsequent events. Now in the going concern, some of the highlights of those public pronouncements, I will just highlight and then highlights I'll just discuss. Contingencies and events occurring after the balance sheet date. The management should assess the impact of COVID-19 and the measures taken on its ability to continue as a going concern. This is talking about the management. So what should the auditor do? The auditor should get representation from the management, making sure that they have made an assessment of the situation and going concern is not at stake. The impact of COVID-19 after the balance sheet, they should also be concerned by the auditor. Inventory measurement, certain items I picked up. Write down of inventories to net realizable value due to reduced movement, decline in selling price, inventory obsolescence due to lower expected sales. So NRV, normal NRV may not be realized in COVID times. Some of the items have gone outdated or obsolete, they become new technologies have come. So may not realize the real NRV. So NRV has to be reconsidered because inventory is valued at cost or net realizable value, whichever is wrong. Normal production capacity, that's technical activities. Accounting standards 22. Sirs, madams, the point here is deferred tax asset. I repeat, deferred tax asset represented by unabsorbed losses and depreciation. I hope you are clear that unabsorbed losses and depreciation, the return is filed on time, will be eligible for carry forward and set up. This will result in a DTA, right? Deferred tax asset. This DTA should be recognized only if there is virtual certainty about future profits. Virtual certainty about future profits. So virtual certainty should be based on evidence. If that is not able, we are not able to establish, or the management is not able to establish virtual certainty in this given situation, then such deferred tax assets should not be recognized. That is a key point. So with that, I think I am topically done, since we still have about 43 of our fellow brethren here. I will take, with the permission of the chairman, 2-3 minutes to discuss something which I think is relevant for the profession as we look into the future based on certain COVID lessons. So I think there's a huge need to empower, and if need be, every one of us have to change. So first thing I would suggest is, at this not at the point of time, we are a little scared to invest, but I think our office infrastructure and the technologies that we use should be substantially better. You know, DC had recently taken a presentation on remote working tools. Is DC still there? He would probably speak about that, maybe 5 minutes. He had done for many of the branches in Kerala. So everyone said that WFH is the new normal. What is WFH? Work from home is a new normal. India's largest IT company, TCS reported a profit of 43,800 crores last year, 2021 financial year. Mr. V. Ramakrishnan, the then CFO, had come for a meeting, virtual meeting, we had an interaction with him at the Kerala Management Association. And 43,800 crores of profit. One of the reasons for that was that many of the employees were working from home. So the rental expenses of having a full-fledged office the coffee, tea, all those things were saved. And that is one reason. Two is that they're saying that the productivity had gone up substantially, work from home. Not wasting time and things like that. I'm personally against that because work from home cannot be a permanent feature. But Infosys is saying that in the next 2 to 3 years, this has become a regular feature. More than 50% of their employees will be working from home. So how many of us still have, even with difficulty, we implemented that with a big delay, in the sense with some delay. March 2020, when the closure came, about to happen, the partners sat together on the eve of the first one was the what is called what is a pilot day of 7. It's called one day there was a in anticipation. One day like a lockdown, it was there. I don't remember the name of the day. Anyway, so we sat and asked, do we have the resources to run for 2-3 months if we're not able to work? We have to pay the rent. Of course, rent we ask for a waiver. All of you should ask for a waiver of the rent. This year we got May rent. We pay about 1,20,000 rupees as a rent for our office. We got it waived for the month of May. Got a very soft letter saying that we are having a lot of problems. So May was waived. Until December, we asked for a 10% reduction. That also been granted. 10% reduction in the rent. So we have the stipend to be paid, the salaries to be paid. People are not working, but they have to be paid. So there are a lot of questions. It's a kind of yes. Personally, also, do we have the resource to pull on? The key question, more important question was, what were the receivables? He's running into, I had a very senior chartered accountant, I had a chat with him. He said, JOMON, last year, after the November, I think November was the, it was extended to November. We did the billing of November audits, tax audits only in February. So 2 months delay in billing, and February billing, and then the closure came in March. How do you collect lakhs and lakhs of receivables? So we make it up, we made it a policy to do the prompt billing on a daily basis. That will be done, the work complete that will be done. So we didn't have large receivables, and some of them like theatre clients and all that. We have 2 theatre clients where we could not ask them for a pay. That also we managed. The third question was, do we have the technology? If you have to work from home, do we have the technology? The answer was kind of only 30% positive, 70% no, we didn't have. Then we looked at this work from home tools, remote working tools, as DC calls them. And with that, we could manage. So that's how. So technology, we have to really improve on, because technology, we used to say technology is an enabler. Then we said technology is a driver. Today, we are saying that the technology is the business of the professionals. Therefore, that is something very important. And any well-meaning firm who has growth on their agenda, I think growth should be there every day. The baseline of my firm is, you can see on the bottom of the slide, is bigger, better, bolder. Grow big, aspire, think big, and grow in numbers, in partners, in terms of deliverables, knowledge deliverables. Better is improve the way you render. Improve the way you render. Better. In your chair, in your dealing with people, in your communication, in the quality of your stationery, all those things you have to improve. That is better. Bolder is taking a bold initiative. Okay, things might change. So let's take a partner now, a young partner, a technology partner. Or tomorrow when the MDP is there, we are saying that let us have a partnership with a company secretary and a cost accountant, or an MBA or an IT guy. To have a techie on board, is highly advised. So this is what's happening. So we should do that. Good people and processes. Well-meaning firm. How can we work? Single sole proprietors are finding it difficult, and today bank audit is also fading out for individual firms. So once that happens, you really need to grow in size, have partners. So good people, add young people, have a team, and good processes. We have seen standards in auditing, compliances. We got a peer review done. We asked for a peer review, we got it done. We got the peer review certificate, which is called the hallmark of excellence. And we have displayed it promptly in the waiting area of our office. One copy of that, a color copy of that. That's a branding. We also send it to our clients saying that we have been recognized. The subject of the mail was, we have been recognized. The Institute of Chartered Accountants of India has granted us the peer review certificate, which is a hallmark of excellence, saying that our processes have attained the required level of maturity, etc., etc. Thank you for your continued support. With this, we are more committed to provide you quality services in compliance with the best practices in the country, which is in line with the best practices in the world and so on. These are certain brandings that we have to do. While talking about that, we yield too much to the client. Yesterday morning, a lady chartered account called me, and she was almost in tears, saying that all the clients are creating trouble. Income tax, they are not trusting us. Income tax portal is not working. So somebody wants us, JOMON sir, not like you. We have small clients. She started saying, I said, all of us are small clients, big clients. So tell me what's the issue. I'm not able to file the return. I said, have you communicated this to your clients? It is there in the media, every day, newspapers reporting. WhatsApp messages, social media, it is, a lot of reports on this. I said, have you communicated? Do you have a WhatsApp group or an email group of your clients? Tell them that income tax site is gone for a 6 and they're not able to fix it. Till such time, you're not able to file returns. And take some paper cutting and send it across. So communicating with the client is very important. That's all part of the process. Another one which I always be vocal on is about the billing and the collection. We do not agree on the fees. Somebody comes to you for a company corporation or a project report. I'm into business consulting now, so I do all the business valuation for it. After the first round of discussion, you say that this is the time frame which we'll need such information, and our fees will be, let's say, for a valuation report, 2 lakhs. Then probably there could be a bargain. Sometimes they may not bargain. And then he agrees. Immediately after that, we send a mail to the client. Only after getting a confirmation, we'll take up this. Work mudinjodan, immediately after we complete that, we raise the bill. We raise the bill. And for one-time assignments, we do not give credit. Audit, of course, 1 month's credit. But I have no receivables today, even in this COVID environment, except very small amounts which are there. No major receivables which are more than 35, 40 days old. That's something which all of us should do. So he had given me the opportunity of heading the southern region, and DC also became, BVSR became. So when we are given that kind of positions, I think it is relevant to discuss with the membership at large that there's a huge need to change. Some of the good practices our seniors follow, but certain things we must change. We should not yield too much to the client, and therefore this is something. And the financial planning, individual financial planning, I'm not talking about clients. We are very poor at that. We prepare financial statements, financial plan. It could be medical insurance, it could be life insurance. We are kind of completely not clear on that. In Guntur in 2014, during PVS's chairmanship, as Sikasa chairman, I went to Guntur in Andhra and I was addressing a large number of members because that time Companies Act 2013 was a hot subject. 2014, only 1 year after the act was enacted. So I asked this question: how many of are insured, term insured for more than 50 lakhs? This was my question. One senior member, I think it was one Mr. Rao, who got up and asked, Mr. George, good question, but small correction required. Ask them how many of you are insured at all. Insurance is free money, people say, but if something happens, of course, many of us are resourceful. But that kind of financial planning and letting the partner know. See, my wife, I share personal note. My wife is a rank holder in her graduation, but she opted to be a homemaker. It has done immense good for me and for my children. So she has sacrificed that way. And to her, I give a monthly statement of assets and liabilities. There's a housing loan. I say that the title deed is to the HDFC. Who is the person to be contacted if I kick the bucket? We live in a very, dynamic world. So it is very important to keep the partner, spouses, particularly if she's a homemaker or he or she, whoever it is. Between that, communication has to be there. So financial planning we must do. And to my younger members, cut down on social media. It is a killer of your dreams. It lacks your aspirations. Students, I always tell them, do not take your mobile phone to your study room. You are finished. Most of you would know that even as SRC chairman, I did not have WhatsApp. I am new to WhatsApp. I make a lot of mistakes, send wrong message to a group. Then when I delete for myself, not for delete for everyone. So I'm new to only 4 months I'm into WhatsApp. So I've lived 53. Okay. WhatsApp came, let's say 5 years. Ever since WhatsApp came till last 4 months, I lived without WhatsApp. So people said, Jomon, if you're not on WhatsApp, you do not exist. This is a kind of, but today, after starting using even now, I was, some of the beeps were coming, I could put it on silent mode. And it's a huge distraction. So cut down on social media and have control over your screen time. It's very important. It's very important that you do it. I was listening to Chetan Bhagat, who came to Kerala, and my son received an award from him, a prize from him for a quiz competition. He is a quizzer, very avid quizzer he is. And so he received it. So Chetan was talking about this. He said that I was shocked to find a few months back using an app that my screen time was 6 to 7 hours a day. And he said it may be okay for a person like me, but not for aspiring students, youngsters. So do cut down on social media. I'm not getting instructional here. It's a humble request to my younger brothers. I'm making as an elder brother. As an Andan, I'm making this request to my Thambis there. And student-friendly, our environment, how much ever we say, our generation had its own peculiarities. Our parents said that. Now the new generation have their own styles. How much ever we love, how much ever they care, maybe they were 10% dissidents. But for the rest of the 90%, who are the future of the profession, I think our offices should become student-friendly. We should develop an academic culture. In my Ernakulam office, we have 54 article students as of now. Trivandrum maybe about 18, so about 72 articles in our office at every point of time. We try to be very friendly with them, give them a lenient work schedule, a 5-day week, leave, decent stipend, a decent washroom. A decent washroom is very important. I've seen many places students have to go to the provision shop in the ground floor, take a chavi from him and go to a washroom, which is not hygienic. So I'm not saying that these are all things. When we moved to our new office, we spent 4 lakhs on having a separate private washroom for the girls and the lady staff. So these are things which I think we should do. Academic culture. If you have an academic culture, we have, from my experience, I can tell you, after every result of intermediate, we will have a queue of people outside our. You don't have to go hunting. You don't have to put a board on the notice board. Notice of board. We don't have to say that vacancy for articles. So that we become a happy organization as we sign off after a day's work. So those are the things which I thought would be relevant for a discussion like this. So quickly to recap in 2 minutes, audit to private limited companies, we are standing at the threshold of the season. Do it with the proper care, in compliance, making sure that financial statements are prepared in compliance with accounting standards. And of course, they are also in the sense that standards on auditing as accountants we comply with. All the requirements of the Companies Act Schedule 3, I have presented that. Before I sign off, I will be sending this in another 2 minutes. It will be in the mailbox of Madre MBSIRC. So that's my promise. So let us do more of a focused work on this, mainly because the regulatory environment is so demanding and there's a lot of surveillance on the profession. New regulatory authorities like NFRA flexing its muscle on the profession, direct recalls onto the members of member charter accounts without going to the disciplinary mechanism of the institute. Therefore, we should be more alert, vigilant in discharging our responsibility. I ardently hope that this session would have thrown some light on some of the aspects which many of us may not have been doing, or there are probably a very new approach to the company audit to private limited companies, where we need to have substantial, huge thrust on accounting standards and auditing standards. With that, probably we'll take a few questions. With that, I'm signing off. Thank you so much, Mansundaram sir and madam, for giving me this opportunity, and to the 45 plus members, 38 still I can see, who stayed through this presentation on a Saturday evening like this, where it could be family time, it could be personal time, it could be movie time. So you spared that in the spirit of learning. So keep going, all the very best. Lockdowns are getting lifted, but COVID is not fully gone. Do vaccinate, stay safe, stay determined, stay focused. This too shall pass, and the future belongs to us. Instead of worrying about what will be the future of the profession, we should do all that is possible to make this our profession, the profession of the future. Thank you very much. God bless everyone. Thank you so much, sir.
Thank you, sir.
Thank you, sir.
So there is one question
thank
from
you.
a member.
Sir, one minute, madam.
Yes.
Sir, thank you, sir, for your valuable inputs to us. It's a dynamic presentation from yourself, sir. We noted your content, sir. It is very useful to our members. Now the floor is open for discussion. Madam.
Yes, there is one question from CA Vimala.
Yeah.
Should the amount unspent on CSR for the year ending 31st March 2020 should also be deposited in a special bank account?
Madam is asking 2020 or 2021.
I think
Before that, in the chat, Ravichandran sir had answered that my question as Udin. Udin was the right answer. So you get the prize for that. Chairman give Ravichandran sir a small prize for the right answer. Okay. And coming to Vimala ma'am's question, Vimala ma'am was very keenly listening because I'm happy for in a presentation, the audience keeps the presenter going. So this question is for 2020 or 2021. So CSR section 135 and the CSR rules have undergone major change. The unspent amount of CSR, 2021, not 2020, March 2021, the unspent amount of CSR has to be provided for by debit into P&L and as shown as a payable. That's a new requirement. That's a new requirement which has come, but not as in March 2020, March 21. This should be provided for, but there is no tax deduction, as you know. There's no deduction under 37. So provision has to be made. It will hit your bottom line. Unspent amount, whatever is that 2%, or what is unspent has to be provided for, and need not be deposited in a bank account. 2021, yes, provision has to be made, and bank deposit I need to refer and get back to you. There is also a requirement of having the similar amount deposited, but whether as on 31st March 2021, I have a small doubt. I need to refer and get back to you. Madam is asking if there is an outstanding in March 2020. No, March 2020, yes, it need not be provided for. From 2021, that this has been amended. So earlier unspent amounts are not being provided for. 2021, what is the amount should have been spent and what has actually been spent, the differential amount has to be provided for, not accumulated unspent amount of 2020. That is the understanding.
Any other questions, members? Please unmute yourselves and ask questions.
You can unmute and shoot also. No more questions, sir.
Yes,
Chairman,
sir. Yes, sir. Yes, sir. Now I request Secretary Madam to give vote of thanks, please.
Yes, once again. Good evening, members. On behalf of Madurai branch of SIRC, I thank you, respected CA JOMON K. Jagg, sir, past chairman of SIRC of ICI, for accepting our invitation to address our members on accounting standards and standards for auditing. Your presentation on the topic was very clear, elaborate, and practical, sir. Thank you very much for sharing your wide and in-depth knowledge on the topic, sir. Thank you very much for your patient answering for our member. And thank you, respected Chairman CA Mohanasundram, sir, and respected CA ex officio CA DC Jain, sir, for arranging a session on the topic presented by GA JOMON, sir, who is a master of the subject. I thank our respected senior members and our professional colleagues for your participation. And it's time for me to announce the forthcoming events on
PVR,
July
sir.
7th.
PVR, sir, please.
PVR, sir, also. Yeah.
Sorry. Thank you, PVR, sir. Sorry, I missed you out. Thank you very much for your valuable address for the session. Thank you, sir. Forthcoming events on July 17th, we have a session by CA Dayanivas Sharma on networking, mergers, and other forms of practice. On 24th July, a representation in appeals, including faceless appeal by CA T. Bhanushekar, sir. And on July 31st, learning from disciplinary cases from CA Prasanna Kumar, sir, Central Council member. Request all the members to register and participate on all the events and make use of the same. Once again, I thank all the members, speaker. Thank you very much for your session, sir. Thank you. Take care.
Thank you, madam. Thank you, Mohanasundram, sir.
Thank you,
Thank you,
sir.
everyone.
Thank you, sir.
Thank you, Joman.
Thank you, sir.
Thank you.
Previous are still there. Thank you so much.
Thank you. Thank you. Thank you.
Now the meeting is adjourned.
Thank you. Good meeting.
Thank you, sir.
Thank you, PVR, sir.
Thank you, ma'am. Thank you, ma'am. Thank you.
Thank you, speaker. Thank you.